Morning everyone, welcome to Ainsley News. It's Monday, 6th of July 2020. No surprise here, we're talking silver. Record silver inflows tell only part of the story. Last week saw an important new record for silver investment. We saw the highest ever inflows of silver into depositories holding metal for ETFs and mutual funds, etc. No less than 32,668,000 ounces of silver was deposited to back up these paper promises. For context, that's double the total world silver production for the same time period. It also takes the total silver holdings for these funds to a record new high of 1.3 billion ounces. Check out this next graph here, weekly transparent silver holdings. Bit of a sharp increase here in 2020. Things looking hopeful for silver. Gold too saw a new all-time high of 148.5 million ounces after 1.6 million ounces were added in just 1 week. This next graph showing weekly transparent gold holdings. Also a bit of a sharp rise there. The previous two charts are notable for a couple of other reasons. Firstly, you can see the incredible amount of metal that has flowed into these new funds since their inception in 2004. Whilst most bullion investors wouldn't touch these paper derivatives with a barge pole, they should also be happy that these funds add a new avenue in for those happy with the risk. Those avenues are a large new demand generator for both metals. The second and glaring takeaway is the way the gold price, shown before in yellow, has pretty much mirrored holdings, whereas the silver price disconnected in 2013. And hence, what we've seen is surging demand with little corresponding price movement compared to gold, albeit the extent of the scale is distorted by that extraordinary 2011 silver price surge. Such distortions in this silver market are many. We recently wrote of the plummeting mine supply of silver, and now we have further confirmation of just how bad it really is for the world's two biggest producers. As you can see in the next chart, Mexico and Peru saw production drop in April of a drop of 432 tonne, or 14 million ounces, with expectations of a repeat of this in May. There we go in this chart. That's almost half of production there for Mexico and Peru. The guys at SRS Rocco also undertook an interesting study into the question of so-called above-ground supply of silver. Some debate rages over what this figure actually is. And the latest Silver Institute for 2019 World Survey Silver states that there's around 2.5 billion ounces, or 79,000 tonne, of identifiable above-ground silver stock. That is just a fraction of the estimated 51 billion ounces that has ever been mined, which silver skeptics quote. However, the fact is that most of this has been discarded as used in industry, silverware and jewellery, and won't be economically recycled. Estimates on how much is held in investment form varies, but 4 billion ounces appears to have some science behind it. That same SI report has identifiable investment stock at around 2.5 billion and 1.35 billion ounces identified in the previous chart, plus stock identified in custodial vaults. However, the questionable validity of that latter vaulted metal, plus not accounting for all that privately vaulted and held under the mattresses silver, sees the 4 billion ounces estimate arise. And hence here is why silver will be a much better performing investment asset in the future than gold. Silver versus gold, mine and supply and recycling from 2010 to 2019. Global silver mine supply equals 8.35 billion ounces. Global silver recycling equals 1.86 billion ounces. Silver recycling to mine supply ratio equals 22%. Global gold mine supply is 1.03 billion ounces. Global gold recycling equals 424 million ounces. And the gold recycling to mine supply ratio equals 42%. That difference in recycling to mine supply ratio is pretty much the biggest thing here, with silver only at 22% and gold at 42%. Because of the 8% of the world gold demand is in the technology sector, versus approximately 50% for the silver industrial consumption, most silver mined is economically lost forever. During the 10-year period, 4.8 billion ounces of silver was consumed in the industrial sector. On average, only 20% of the annual industrial silver demand is recycled. Thus, less than 1 billion ounces of that 4.8 billion consumed in the industrial sector will likely be recovered. Thus, adding up the possible recycling from the 8.3 billion of silver mine supply in the industrial, jewellery and silverware sectors, and adding it to the physical silver investment demand, assumed at 100% recycled, we arrived at approximately 3.3 billion ounces of silver not economically lost. By subtracting the two, we came up with 5 billion ounces of economically lost silver supply. This next chart here, just showing estimated lost supply for gold and for silver. A massive difference there, poor old silver. It is important to understand this dynamic when looking at monetary equations such as stock to flow and the like. It's also critical to look at this when considering a gold-silver ratio, or the GSR, still hovering close to 100:1. This latent price of silver against gold is the same action we've seen time and time again as that GSR drops to its historic mean and beyond, as the price of silver rockets against an already rising gold price. Go silver. I'm sure there's a fair few silver bulls and buffs out there. Hope you enjoyed today's news. Join in tomorrow for everything bullion and probably everything crypto because it's Tuesday. Remember, you can go to ainsleyBullion.com.au for all of our news, purchase any of our products, or Ainsley Wealth for all of our cryptocurrency products. We'll catch you soon.